Hey everyone, welcome back. So we were doing November 2020 paper 23, right? And in this video we'll be solving its question number 3. So let's begin. Now this question is related to the topic of single entry and incomplete records. This is a really interesting question as this topic usually gives information in a pretty scattered form. So you have to find out the missing figures and where the information is hidden, how do we calculate the depreciation, whether there are any accruals or prepayments in the question or not. And the requirement, there are just two parts in this question. In first part we are required to prepare the income statement for the full year, and in the second part this is related to maintaining double entry bookkeeping system, right? So let's begin with the question. It says Hazik has not maintained full accounting records for his business, and he has provided the following information for the year ended 31st July 2020. So if the year end is 31 July, this means that the year start would be 1st August 2019. Although it is written, but still make it a habit to write the start of the year whenever you read the year end. Okay, now what do we have? We have the opening balances and we have the closing balances. Very useful piece of information, right? So first of all we have bank loan. You can see that in the start the bank loan was 6,000, but now it is, the year end it is 4,500. So what is happening? There is a reduction of $1,500. It has reduced by 1,500, which means that 1,500 of loan has been paid off during the year. It has been repaid. Then we have the inventory balance. We have opening inventory, but there is no closing inventory. So we might be required to find that out using, I don't know, maybe ratios, right? Then we have net current non-current assets at net book value, right? Then okay, so opening net book value is 35,580, closing is decreased, that is 32,450. Now what could be the reason behind fall in your non-current assets? There could be disposals in the question that we have to look out if there are any disposal proceeds in the question given to us, or another reason why the non-current assets decrease during the year is because of depreciation. Students usually forget this expense when they are preparing income statement using single entry records, but please remember this, that if you have the opening and closing non-current assets, then do look out for depreciation if there are no disposals in question. So this means that the fall would be mainly due to depreciation and we have to take that expense in the income statement. Then we have rent prepaid, opening, there is no closing. Trade payables, opening and closing are also given to us. Why would that be given? Opening and closing trade payables, because if we want to make income statement, we would want to have purchases, and for that we might have to prepare purchases ledger control account using opening and closing trade payables, right? And lastly we have some wages accrued, closing date, not an opening. So we also have to remember that we can't take the rent and wages figure given to us in the bank account. We have to adjust for accruals and prepayments first. After the opening and closing balances, we are given with the summary of bank account for the same year. Now what is happening on the debit side? We have sales receipts amounting to 166,000 and balance CD. Okay, so balance CD is on the debit side and the balance brought down was also on the credit side. So this means that there is an opening overdraft and closing overdraft as well, right? So business is going through some liquidity issues, financial issues. That is why its bank has an overdraft, negative balance. On the credit side, other than the balance brought down, we have payments to credit suppliers. Again, this information is very important. Why? Because we might have to prepare the purchases. Of course, we will have to prepare the purchases ledger control account because purchases are directly not given to us. We have to find them. Then bank loan repayments. Yes, see, there was a fall of 1,500. Why? Because we are repaying an amount that is 1,500 through bank. Then bank loan interest is also paid during the year, rent is paid, wages are also paid, general expenses, another expense, and lastly drawings. So the drawings through bank. All right, good. In additional information, we are told that the gross margin was 40% and all sales were for cash and all cash received was banked. So these are all the sales that we have in this business. For Haziq, there are no credit sales, so we don't have to prepare what? We don't have to prepare the SLCA, sales ledger control account, to find out credit sales, because all sales are for cash only and all the cash is also banked. So as we can see that cash must have been credited and bank debit with the sales receipts. Okay, now part A says to prepare the income statement for the year ended 31st July 2020. So starting with revenue, we know that income statement starts with revenue, that is the sales receipts in this question. What is the amount? It is 166,000, that's it. All the sales are for cash, there are no credit sales. Then after sales comes less cost of sales, and we know that how do we start the cost of sales? We start with opening inventory. Is that given to us in the question? Yes, we have opening inventory, we don't have closing inventory though. Opening inventory we have, and that was 8400, closing inventory is missing. Opening inventory is 8400. Then after opening inventory comes, we have to add purchases, but we are not directly given with purchases, we have to calculate them. So this is our working number 1. So let's dedicate a separate page for working area and let's do all the workings over there. So our working number 1 is related to purchases, and for that we have to prepare the purchases ledger control account. How do we do that? We know that the balance brought down will come on the credit side. That why? Because it's a total creditors account. So all liabilities have brought down on the credit side and carried down on the debit side. Then if there are any payments to the suppliers, they are debited in the purchases ledger control account because bank is credited for that. And lastly, we have to find the purchases which will be on the credit side, right? Now let's fill this account. We have opening trade payables amounting to 6280 and closing amounting to 7460. So 6280 here, 7460 here. And how much are we paying to our suppliers during the year? Payments to credit suppliers is 96220. So bank credit and purchases ledger control account debit, right? Now you just have to find the missing figure. 96220 plus 7460 less 6280 would be 97,400 is the amount for purchases. So this is our working number 1, 97,400. Please don't forget to mention the working number, that what is the number of the working and where you have done the working, right? So mention the page number as well, that on this page please refer to this page for this working. After purchases we do what? We subtract closing inventory. If there are any returns outwards in the question, we also have to subtract them from purchases, but there are no returns outwards in this question. And if there are any inventory drawings, so they are also subtracted from purchases, but we don't have inventory drawings, we have bank related drawings, so that will be ignored for income statement. Now we have to find out closing inventory. Closing inventory is not given in question, so again we might have to do some working. Now how can I find closing inventory? I just have the opening and closing balances, I have bank account, but I have one really important piece of information, which is the gross margin. The gross margin was 40%. Okay, so this is my working number 2, which is for closing inventory. Now in this question we are told that our margin is 40%. Gross margin is calculated on sales, right? That is why the formula for gross margin is gross profit upon revenue times 100, right? Now if you are given with this, the ratio, and do we have anything else from this formula in question? Do we have gross profit yet? No, we don't have gross profit yet because we don't have cost of sales yet, but we have revenue in question, and that was 166,000. So using what we have, we can find out what we don't have. So 40% is the margin, the gross margin. We have revenue, we don't have gross profit yet. So 166,000, right? Don't write 1 multiply by 100 over here, no, because you already have the ratio in percentage form. So directly multiply 40% with 166,000 and that would give you a gross profit of 66,400, right? Now just follow the sequence that how we cannot find closing inventory directly, we have to find something else first. So that will lead us to closing inventory. So gross profit is 66,400. Now we have two figures. We now have revenue and we have gross profit. Can we find out something else? Yes, we know that revenue less cost of sales is equals to gross profit. So if we have revenue 166,000 but we don't have cost of sales yet, we still have gross profit. So using these two figures I can easily calculate my cost of sales, and that would be 166,000 less 66,400. 99,600 are my total cost of sales. Right now this includes opening inventory, purchases and closing inventory, the subtraction of course. So this is what these are cost of sales. Let's first write cost of sales, that these will be subtracted from my sales revenue, so that I will have a gross profit which I have just calculated of 66,400. But it doesn't mean that if you have now cost of sales, you have gross profit, you will forget closing inventory. No, now it's very simple, that now we have cost of sales, so we can easily find out closing inventory. Cost of sales, the formula is opening inventory plus purchases less closing inventory. So 99,600 is equals to, what was the opening inventory in purchases? 8,400 and 97,400. So positive 8,400, positive 97,400 less closing inventory. Now you have two options, either you take 8,400 on the left side and 97,400 also on the left hand side, so that will give you a negative figure, minus minus will cancel on both the sides, or just take closing inventory on the left hand side and bring 99,600 over here. So these two terms will remain positive and this will be negative. I'll just show you that. If I am bringing closing inventory on the left hand side, so closing inventory would be 8,400 plus 97,400 minus 99,600. So you will get closing inventory of 6,200. Just because Hazik is not following double entry bookkeeping, he is not keeping double entry bookkeeping records, so that is why we calculated closing inventory in this manner. Otherwise closing inventory is just given to us directly in question. Closing inventory is usually counted at the end of the year manually, right? But this might not have happened in his business, so that is why using ratios and different formulas we calculated closing inventory, and that is 6,200. Let me just give you a recap. If you have gross margin, you will use the margin and the formula, that whether sometimes you might have gross profit, sometimes you might have revenue. So in this question we had revenue, and using these two amounts, these two figures, the percentage and the revenue, we calculated gross profit. Then using the sales less cost of sales formula, we calculated cost of sales, and then its breakup was used, that is opening inventory plus purchases less closing inventory, to find out closing inventory. Pretty simple, right? Now we have the gross profit. After gross profit comes other incomes. Do we have other incomes in this question? Like any interest received, commission received, discount received, or a fall in provision for doubtful debts? No, I don't think so. Yeah, we don't have. So we just have to now directly subtract other expenses. In other expenses, starting from the start of the question, we have bank loan is not an expense, not inventory, non-current assets at net book value, right? So you remember we discussed that if there is a fall in the value of non-current assets, it could be due to depreciation, because there are no disposals in the question. So don't forget to take this expense in your income statement. So first expense would be depreciation on non-current assets, right? And you can show its working below, that opening value was 35580, closing is 32450. Just show that over here, that 35580 less 32450, that would give you a depreciation of the difference, of course, that would be 3130. Then the next expense which we have in question is related to rent and wages. So let's first write that down. Next we have rent and wages. Now if you have two options now, either you prepare a T account for accruals or prepayments expenses to deal with accruals or prepayments, or you can do them directly as well. Let's make a T account. So that would be my working number 3 for rent. You don't have to show such small workings in working area. If you can manage to do them on the question paper along with the question on the side of the question, do that as well. So rent, in opening we have rent prepaid, and that is 240. Now rent prepaid is what? An expense which is prepaid is represented by an asset, which means that you have paid for an expense but you are yet to receive services against the use of that expense. So opening asset, right? Rent prepaid opening balance, it is an asset, and assets opening balance is shown on the debit side. So 240 will come on the debit side as a brought down. We don't have carried down balance for rent, however we are paying some rent during the year, and that was 2640. So what is the double entry for this? We debit rent account and we credit bank account. As you can see, it is being credited over here. So rent will be now again, the entry will also be again on the debit side with bank, right? That's it. There is no closing figure. So this means that what will go in income statement? The sum of these two figures, 2640 plus 240, and that would be 2880. So this is what? This is the rent which is of your current year only. And if you want to do this directly, so you can do that as well. For example, of course, the rent which is being paid during the year will be taken into account. That will be 2640. And opening prepaid expense, this means that this was paid last year, but this belongs to current year. So this will also be added in the current year expense which is paid, right? So keep the basics in mind. If that expense is related to current year, it will come in the income statement. So 240 will definitely be added in the amount which I am paying during the year for that expense. The total would be 2880. Let's do for wages as well in the same manner. I am paying wages how much? 41,400 is being paid during the year. Now, do we have an accrual or prepayment, and at what date? For wages, I don't have any opening balance. However, there is an accrual balance of 610. Now, 610 has been accrued at year end, and accrued expense represents a liability. This means that I took services from my labor amounting to 610, but I did not pay them in the current year, and I am liable to pay them in the next year. However, this expense represents current year. It is related to current year, so this should definitely become part of my current year income statement. Therefore, 610 will be added in the amount paid for expenses during the year. So the total would be 42010, and if there are still doubts, let's prepare its T account as well. That would be my working number 4 for wages. There was no opening balance. However, there is a CD balance of how much? 610, which was a liability. Now, liabilities carried down balance comes on the debit side. So that would be 610. Now, how much am I paying during the year? 41,400, and the double entry for that is bank credit, wages debit. So this will also come on the debit side, 41,400. So what will go in the income statement? The sum of these two figures, 42010. If there is a prepaid expense opening balance, that will also be added in the expense paid during the year. If there is a closing accrual, that will also be added to find out the figure for expense which belongs to current year, which is incurred for the current year, right? You can mention the workings as well, working numbers. This is working number 3, working number 4. Now let's move to, do we have any other expenses in question? We have dealt with rent and wages. Yes, we have 2 more expenses, bank loan interest and general expenses. We don't have any opening or closing balances for that, so just take directly these 2 figures. Bank loan interest is 300, general expenses are 10890. Okay, right. So these are the total expenses which we have in question. You can also do it in a way that you don't take bank loan interest along with all the expenses. Just first find out the operating profit, and then from the operating profit subtract the bank loan interest, so that you have the profit for the year, right? Both of these methods are correct. Now let's total the expenses, and that would be 59210. From the gross profit we have to subtract 59210, which will give me a figure of 7190, and that is Hazik's profit for the year. So if you are familiar with control accounts, if you know that if there are some missing information, we might have to find them out using PLCA or SLCA. If you are familiar with the ratios, sometimes you might have to find inventory using inventory turnover formula or liquidity formulas. So make sure that you know them, you understand them very well, so that you can attempt such questions easily and without wasting too much time on thinking that what figure to use to calculate what. So we are done with first part. Now we are left with just the second part, and that is related to bookkeeping. So let's begin. So part B says, advise Hazik whether or not he should maintain a double entry bookkeeping system for his business. Justify your answer with 2 advantages and 2 disadvantages. So this question is of total 5 marks. So 2 disadvantages, 2 advantages and 1 mark for recommendation. Now what could be the advantages of maintaining double entry system bookkeeping? Of course, since you remember that this his business was that he could not maintain double entry or full accounting records. That is why we prepared income statement in such a manner that we had to calculate depreciation using opening and closing balances, and we also figured out that there were some accruals and prepayments using the opening and closing balances, and of course there was no closing inventory, so we used the ratios to find that out. But if he is maintaining double entry bookkeeping records, so we don't have to go through all of that hassle to find out the missing figures. Why? Because there will be detailed records present for every account, and there will be of course the day books and the ledgers present in his business, which will facilitate him to prepare the T accounts, balance the T accounts, bring down the balances, and then prepare a trial balance for that, so that he can easily prepare the financial statements, right? Moreover, if he is following the detailed recording transactions properly and in a detailed manner, so there will be less chances of errors, or there will be less chances of missing any items that go under recorded or over recorded, or the misstatements. The chances of that will be decreased. Of course, they cannot be eliminated even if we are following double entry bookkeeping records, but yes, they will minimize to a very good level. Furthermore, you can also write that he can also prepare control accounts easily, as we also prepared a purchases ledger control account in this question, but again using scattered information. So control accounts will also help in locating errors, and same goes for trial balance. So these are some of the advantages that you can write. You just have to write 2 advantages. Then what would be the drawbacks? The drawbacks, of course, we have to write, that is why we will be writing, but the benefits are more than the drawbacks of maintaining double entry bookkeeping records. So what could be the drawback? Of course, since it will be something new for him, he will have to carry that out for the first time, so he might find it time consuming to prepare detailed records. But now with computer systems and ICT, this process can be much time saving, and in a more efficient way it can be carried out. So yes, he might find it time consuming. He might not have the skills to maintain or to prepare detailed records, so he might have to hire an accountant for this job, which would be a cost for his business, but again a good cost which he should bear. so that his accounts are prepared in a smooth manner, free of errors. So these are some of the disadvantages which you can write. It's up to you if you want to recommend that he should not prepare double entry and keep making accounts in a single entry manner, or he should go for double entry bookkeeping double entry bookkeeping system. And make sure that whenever you are recommending, whatever you are recommending, justify it. Again, justify it with one point, that why you are recommending this side. Don't just say that I would recommend him to prepare double entry bookkeeping records and that's it, end of the answer. No, again, justify it in a different way. You might even be repeating your point, but don't use the same words. Okay, so I have written a sample answer. Let's read that. So, undoubtedly, maintaining double entry bookkeeping records will give him several benefits. So, what could be those? Like, it will be easier for him to record transactions in their respective daybooks and ledgers. So, this is my first benefit, my first point. Then, it will facilitate him to prepare trial balance and control accounts easily to locate and correct any errors. So, this is my another benefit, another point. Then moreover, another benefit, of course you just have to just stop at 2 disadvantages and then go for disadvantages. This is a sample answer and I have squeezed a lot in this case, the space given to me, but just write clearly, simply and according to marks. So, moreover, the process of preparing financial statements could be carried out much efficiently and in less time. So, this is my third point, that financial statements can be prepared much efficiently and in less time. Now, the disadvantages, of course, since it will be a change for Haziq, so he might find it time consuming to prepare detailed records. First point for disadvantage. And he might even have to hire an accountant to manage his accounts, which would be an additional cost to his business. So, I am not just writing the point, I am elaborating it, I am explaining it, that he might have to hire an accountant. Why? Because he might not have the skills for that and that would be a cost for him. Lastly, I am recommending that nevertheless I would still recommend him to maintain double entry records. Now, the justification: for better accuracy in his records and for better decision making. So, this is my final mark. Again, you don't have to write this much, you just have to write according to marks. 2 advantages clearly written and clearly elaborated, 2 disadvantages, and then 1 mark for 1 point for recommending, that what side you are recommending and why are you recommending that. That's it, right? So, we are done with this question. In first part, we were required to prepare an income statement using single entry records, and in the second part, we explained that whether he should go for double entry bookkeeping system or whether he should stay with his single entry way of making accounts. So, that's it for this video. I'll see you in the next one with question number 4. Till then, take care. Allah Hafiz.